Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's April 19th here. It's kind of early this morning, so not everything is released yet. So we'll jump right into the economic calendar, and you'll see what I mean. However, the data that did come out today, we got so far this morning, is the weekly jobless claims, which we get every week. And as you can see, last week we had 230, or the previous week we had 233,000 people apply for unemployment. Expectations for the reports this week was 230, and it came at 232,000 people. So still strong numbers here in terms of jobless claims. The big thing about this week is that this happens to be their sample week, and which is the number that they use towards part of their calculation for the April's jobs numbers. So when they have a sample week, they kind of use that as part of their big formula and for what comes out into their terms of their jobs numbers, which will be coming out May 4th, I believe, is when that is released. So this could have some bearing on there. We also got Philly Fed Index. This is the manufacturing region of Philadelphia area. We had a 22.3 back in March, and it increased 23.2. So unlike New York, it didn't seem to be the concerns about tariffs and everything else didn't seem to affect the Philly region unless it was supposed, but unless it would have been much higher, I don't know. But in any case, it went up versus going backwards compared to New York. And last but not least, not a high impact one, but we got the leading indicators for the month of March. In February, it was 0.6% growth was showing for leading indicators. This will be released a little later this morning. Unfortunately, as I indicated yesterday, I'll be at an event today. I just want to try to get this out for you folks so you guys got an idea where rates are at and where the market is moving today, at least early morning stages. And of course, it could shift, and we could touch on that a little later after, on this. Stock market starting a bit mixed, kind of like what basically how it closed yesterday. The Dow started the morning off positive yesterday and closed negative, and it's continuing its negative trend today, whereas Nasdaq and S&P 500 are both in the positive territory. The big thing right now, because the geopolitical seemed to kind of quiet down lately, is they're really looking at the Q1 earnings reports for 2018, as we're getting indicated. So far, it's been pretty impressive. They've all been looking really well so far, and haven't really seen anything negative that came up yet, especially on the big companies. But so that's a very positive sight, and that's where people are feeling a little bit more optimistic about where things are moving. Also, as we had indicated, today's no exception. We have several Fed speakers with their engagements today, and of course, it's possible that one could say something that that might disrupt the markets a little bit, or at least, especially if they start talking more about inflation again and raising interest rates, as we had experienced back in end of January, February. The markets were kind of going at a negative pace, which was kind of setting off all this volatility about inflation raising rates at a more at a higher level, like 4 versus 3 is what they were expecting, and if they start talking about like that, that could disrupt the markets again as well. So speaking of such, let's go ahead and look at the mortgage bond securities, mortgage-backed securities, excuse me. And as indicated, we got pushed down below the 25-day moving average and the 50-day moving average. Now this is creating a double ceiling, which is going to be even tougher to break above. And we had more to the downside, and we did. We came down. We're touching off the floor of resist or ceiling, floor of support. Excuse me. So we have this floor, and it becomes support. This becomes the ceiling of resistance, and right now we're kind of touching out for this. I don't know if we'll really break below this, but it seems to have been pretty strong in the past. As you can see, every time we touch it, we rebound a little bit. But again, rates are down about 17 basis points so far this morning, which in turn gives us a little worse pricing towards interest rates so far today compared to what we left off with yesterday. Here's yields. So yesterday we did break above that 50-day moving average, and now it's working towards its ceiling of resistance here. And again, we've reached these levels before, but only got pushed down. So that's a good sign. This has been a pretty strong ceiling for us. So if you are out there, you might as well kind of float a little bit. If you are out there looking to refinance or purchase, you might as well just kind of float a little bit, because potentially you could rebound back down to this range, as well as the bond market could rebound back up to this range and at least get you slightly better pricing here as a result of it. But in the meantime, yeah, pricing did worsen today from yesterday's rates as a result of that. So anyways, if you guys want to get more data, just come over to Twitter. I do post throughout the day on Twitter on my handle, Mike York. And otherwise, you guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys on Friday. Bye-bye.